Hi guys, this is Lee with the Market Sense for the week of September 1st, 2020. The charts in this presentation are provided to us by the Trade Navigator software, that's from Gettess, and this is a weekly bond market chart. I'm sure you're tired of hearing this, but there's bonds in the middle of a sideways pattern, which is in the middle of a sideways pattern, which is probably going to stay sideways all year. After a little breakdown, we've had a couple of these now. You had an exhaustion bar here that got reversed, and then this isn't a pure exhaustion bar because it didn't close quite on the low, but that's turned and got reversed the very next week also. Uh, that's not surprising. There's not a lot of direction to this market, so getting reversed on a weekly basis makes perfectly good sense. I thought they might go down to the 172.25 area, but obviously not. They've opened higher and kind of stayed there. The highest probability of them reaching this week was 75.05. That's 175.05, and clearly they've blown right through that. So we're looking at 176.27 as the next possible target, and heck, could they go challenge 179? I think they could. But the 76.27 is the most likely area. The problem is it's hard to get on board anything and expect them to run because it just all looks sideways and has since way back here these 2 weeks. Sideways is what we got. Stocks are anything but sideways. They are so strong it's just obscene. They haven't even traded the upper moving average, which is the most ridiculously high support we could have, in like 4 weeks now. And last week looked so frothy, but here they are up higher again this week. Now, we do have a next upside target here around 35.46, which they have not reached yet, but geez, give them a break, huh? The support that they should possibly hold if the trend's going to continue up is around 34.29, and that just seems like it's miles below them, doesn't it? Uh, this is going to end at some point. I promise you it will, but there's just not a whole lot you can do with it. The smart thing is just to make sure you don't sell into this. They'll top out for no particular reason and disappoint us for not being short, but there'll be other opportunities that you just can't afford to sell this. You could have sold this way back here and it would have been overdone, and you can see how much that would have hurt. So don't sell. That's the smartest thing you can do. There's not much you can do to buy them, but don't sell them. Now this is the QQQ ETF, and it's not quite as frothy as the S&P, but it looks pretty darn good, and maybe even better since they've been at new all-time highs since way back here in the chart. But the acceleration to the upside at this point, it has the signs of a blow-off, but you can't predict blow-offs. You can't pick when they'll end. So we're looking at, I think it's 297.16 if I have that correct. That's the upside target here, but it's just a target. I don't consider it resistance. The best support is 283.67, and just like the S&P, they haven't been anywhere near that so far this week. They just want to go higher. And, if they get another vertical week like this, just boom up like this, that's just makes it that much closer to an end. But again, with blow-offs, they're really not predictable. But for sure, you don't want to sell them. They can just go so much further than anybody expects, and no sense getting caught in that nonsense. So that's what we've got for you today. Hope you can find something